While I was enjoying a short holiday in Malaga, Spain, Nasdaq continued upwards, pushing to all-time high. And Snap in the $1,000 challenge was sold during the vacation at 16.33, leaving 48.59% profit, bringing the $1,000 challenge up to $3,124. We have three timed the $1,000 to $3,124, and this week I have a new candidate. You are listening to the StockInvest.us podcast, Trading Tips with Jim, as we are heading into week 22. First, and as usual, I'll just give you a short guidance what I think will happen during the week. By the end of the podcast, we will get back what happened with Snap and the new candidate, which I personally will put my bet on in hope of return, because there is no guarantees for return. They come and they go. If we look at last week, for instance, Nasdaq was up by 1.41%, but if you study the numbers, you should notice that during the week, from Monday to Friday, only 37% stocks went up, while the rest either was unchanged or going down. And if you go to, for instance, Thursday last week, 81% of all companies listed at Nasdaq actually went in a minus. Some of the reason why Nasdaq went up last week was, of course, due to Nvidia, which had very, very good quarter results, pushing the entire index up. And if you're a new listener, this is how the index works. They do not calculate for every single stock in the index, and the stocks that are in the index are weighted, meaning that the bigger companies like Microsoft, Meta, Nvidia, they will, of course, any changes there will affect the market much more. So when you see a green day at Nasdaq, doesn't necessarily mean that most stocks went up, which has been more the case lately than before. There is very, very selected stocks going up, some referred to as Magnificent 7, etc. But Nasdaq is pushing to all-time high, and personally I like somewhat what I see, because there is so much accumulated support under today's level. Currently, Nasdaq is overbought on the relative strength index and normally should correct down. But we saw the same thing back in November last year. Mid of November, Nasdaq went into overbought. But while slightly relaxing down, the market just continued upwards again, mainly driven by some of the major stocks. So we are a new week. What will happen? Will we just continue upwards or downwards? So here is a small lesson for you. Whatever is in a trend is usually how it will remain. You try to look for things breaking or changing within the trend. Nasdaq being at the top of the trend clearly indicates a high chance that it should correct a little downwards, but the general trend for Nasdaq is still very good. And before starting today's podcast, I checked a few news, and most people seem to agree that if there will be Fed cuts, interest rates cuts, market will continue to push upward. The reason for this is very simple, because if there is very little return on your money in the bank, you have a higher tendency of investing into the stock market. Some argue that we can see a fantastic end of the year if this will be the case. The question is, what will Fed do? And during this week, you will know a few of the things determining what Fed will do. On Friday, which will be the one day in particular, you will have the personal consumer expenditure numbers, and they will be very, very closely monitored. For inflation is expected to come in at 2.8% annually. If this number is high, then there is less likelihood of interest rates cuts. We do know that for September, we are talking a few months ahead, the expectations was 70% expecting interest rates cut. Now it is down to only 30. So more and more of the professionals are weighing in on less interest rates cut this year. First, it was celebrated that it would start early in the year, but as you heard in this podcast, would not happen because energy prices was very high, and that would cause inflation to remain very high. As we speak, oil is at $78, but more or less unchanged, up at what is somewhat high level. We still haven't seen any peak. Oil being this high, and a few other things like wages in the United States increasing quite much, means that the end consumer will feel more pain. When salary goes up, the money has to come from somewhere to pay the salaries, and these either come from making things more efficient, meaning that you will fire workers, replace with automatics. We have AI coming in. Before that it was robots, but you try to outsource things, and etc., all in the attempt of being more efficient to get more out of every dollar as things are getting more expensive. Personally, I do not see any reason why we should have a cooling. To me, there is absolutely no argument. We see the money printing just continues at a very high level. Money being flushed in, especially into public sector. And that will just keep the buying pressure up. And as long as there is a buying pressure, and we see a lot of companies now are shutting down stores because they cannot keep them up either from theft or sales or otherwise. Happens to all of the major companies, Foot Locker, Costco. You can go through Walmart, you can go through them. Tons and tons of companies are actually shutting down their stores. Less stores, less goods available, still high amount of money in the market means that there will be a pressure on the goods available. So to me, there is no argument why prices should fall very soon and give room for cut in the interest rates. Hopefully, I will be wrong this time, not being right, which I've been for the last 5 years in terms of the interest rates. We will see. Nothing is better than markets continuing up if you are in the stock market. A few other items this week. We are getting to the end of the quarter results. There will be a few quarter results, but I will not mention any of them because there's no really big ones to change the market as such, but there will be, so you should check the calendar yourself. You can do this at stockinvest.us if you want. See which companies will have their quarter results. And on top of this, if you go to your tickers, we will put up the warning 7 days before they have the quarter results, because we know how stocks will change before, during, and after the result presentations. So we have a few numbers coming in this week. And Thursday you will have revised GDP numbers, and they are expected to be revised downwards to 1.3 annual growth. Several European countries are totally struggling with their GDP. Absolutely interesting times ahead. Now, I was saying that Nasdaq was at the top of the trend, and normally that gave the idea that we should have a slight correction either to the middle of the trend or to the bottom of the trend. So just to say that, not leave that argument empty, the top of the trend is 7,500 as we speak, the middle is around 16,000 and the bottom is around 14,500. I do not see right now there to be room to go down to 14,500. That scenario was much more present before I went on holiday, but as I said, as we continue upwards, you build a lot of support below. Things may come out of the blue and put a real scare in the market, causing huge falls. I'm not sure if the numbers this week, the PC numbers, etc., will have that effect. But we do know there is a lot of international things going on. And again, there are issues around Taiwan. We will see how that plays out. But Middle East seems to be somewhat stable. The Ukraine war is somewhat stable. Thanks God for these things. So I do not see any of these popping up very seriously this week. We do know that NATO and Stoltenberg is trying to push a bit harder, allowing Ukraine to send rockets deeper into Russia. If these things starts to happen, of course, that can cause fear of escalation, and if we get to these sort of news items again, then you can expect markets to react. Better speak about technical signals, make for much for joy. By the way, if I forgot to mention, Dow Jones fell by 2.34% last week, ending the week at 39,069 points, after touching 40,000 points early on. Buy and sell signals tell how many companies are giving buy signals. We do know if this number is very high, you can have the high chance of a correction downwards. Currently 30% of all companies are giving a buy signals, actually a little bit down from last time I was live. And the Nasdaq is at 28. We have New York Stock Exchange at 32. London, Frankfurt, both at 41. Very high for Europe, that is. Tokyo 26. Shenzhen, China 20. And I will translate this into something more readable for you in general. These numbers are not very high. They are not very low. To me, they indicate a possible steady scenario. And summing up Nasdaq, what do I think about Nasdaq this week? Nasdaq being overbought on relative strength index was very high on Thursday and Friday. Very, very strong support below. I think there is an equal chance of a continuous upturn as a downturn. If market starts to fall, there is so much accumulated volume below support that I cannot see a swift, very brutal fall as we move forward. The brutal fall usually happens if things get too euphoric, and the euphoric thing may happen because we may have the scenario where Nasdaq suddenly goes very, very fast from 17,000 points to 18,000 points, get into a last frantic things before really collapsing, and if it gets some momentum on that downturn, we can easily break support at 16,000, 15,000. Seen this many times before, but right now what I try to say is that markets look somewhat stable, and that is very okay in my opinion. I see that stock invest, we hold Nasdaq at a score of 0, meaning hold. Totally agree to this evaluation. That is done by computers. Now you just heard me say the same from my experience. By the way, gold was pushing over 2,400 but has fallen a little bit back, currently sitting at 2,341 points, while the 10-year treasury yield still remains high at 441. And if I'm correct, I think by the end of the week, especially on Friday, we might see this number increase even more. Will be very interesting to see. You may wonder what I'm looking at. I'm looking at the time. I see that we are 13 minutes into this podcast, and again, I just promised me to do a shorter, hopefully more interesting podcast. After a good vacation, I could probably speak easily for an hour, but will not do that today. We will go straight to the $1,000 challenge. And the $1,000 challenge works like this. Last fall, after having a portfolio for many years doing very, very good, I wanted to change the concept a little bit, do this podcast a bit different. And I started a $1,000 challenge because that's how I started my trading, not with $1,000. It was more like $450 many years back. We go back to 96. That was how I first grew my values. Starting with 450, very lucky I had a good streak. Picked stock at I used a certain method of picking stocks, and that worked very well. In short, what I did is I love technical analysis because technical analysis says something about the mass psychology. It will not always be correct, but then usually it's very good, and I like momentum indicators like relative strength index and a few other of these. And it's very easy to understand when you look at the chart. At Stock Invest, you will see the relative strength index chart below the main chart, and it just indicates when things are overbought or oversold, or very, very high buy pressure, for instance. When it gets too high, it usually reacts down, and when it gets too low, it usually reacts up. And what I did back then was buying these candidates was very low on the relative strength index. It was two things I was primarily doing. Buying on very low relative strength index, and very often accompanied by increase in volume, because if you have a huge drop in the relative strength index, you have the volume going up. It's usually a sell-off, meaning that you get all the negative people up, giving room for some upturn. And we have grown $1,000 to $3,124. 3 times we have increased the money, but this is not where I want to be. I want to be much more than that, but it seems to be going at a slow pace. Should be very happy indeed, because at the bank you will only get what, 2, 3, 4%, and here we have quite much more than that. Now, Snap, I got into Snap at 10.99. I thought, or I said to you, I think it's a very good buying position. Was very lucky about that. It went all the way up to 17.14. I had a trailing stop loss after some wish-wash back and forth. It was finally sold at 16.33. Currently sitting some 5.30 or some 15.30. So it's still extremely up from when we bought it. But I'm out of Snap. I have been checking where and what should I buy. Now, personally, I would love to go into electric vehicles, but looking at the charts and looking how they stack up, I do not see that pattern for extremely short-term gain, and this is a high-risk portfolio. So I am looking for stocks which, in very short term, meaning like a week, can give a high return. Sometimes we have to sit a few weeks, sometimes it's just in and out. And in this way, I will always tell you which stock I will buy, and I will tell you before I buy it. So for today's case, which I found one stock, which I believe have a somewhat good potential moving forward, is Fate Therapeutics, FATE. It will be a bit of a gamble, but I think we can knock it in our direction. Currently sitting around $3.52. I will, today markets are closed, it's Monday, but tomorrow I will try to get into Fate Therapeutics with the $3,124.84 that I have from the Snap sale, and buy Fate as cheap as I can tomorrow on the Tuesday, and see if we can be able to continue to grow the money. So that is the $1,000 challenge. Snap, if you wondered, is sold, giving us 48.59%. Was one of the best so far in the challenge. Now I will go to Fate Therapeutics. Hope to do somewhat the same. If you look at Fate Therapeutics, and if you look at the relative strength index, you will see some of the things that I said. I just said why I will pick it. But there is no guarantee. This is extremely high risk. 18 minutes into the podcast, I told you Snap is sold. I told you I will get into Fate Therapeutics. Repeat that one more time. FATE, Fate Therapeutics, will be my gamble for this week. I will buy it tomorrow as low as I can. I will post it on the YouTube video so you can see the actual position. And we will see if it will be for a week or if it will be longer. Now, getting to the very end of the podcast, over these years I've often shared stories, and especially last years, of what I've been doing. And yesterday evening I was out with, actually not yesterday evening, I started a bit earlier on the day. I went with my detector, looking for items. I had a plan, because after reading some history about Lithuania, we know that Napoleon, he went through Lithuania on his way to Moscow. And if you know the history, so he managed to get to Moscow, but Moscow was burnt down. He then had to retreat back. He didn't want to spend the winter in Moscow. He wanted more comfort, so he went back. They went back and they went to Vilnius. We are talking 1812, we are talking December. And that year, actually from early September, was extremely cold weather in Europe. In somewhere around November, according to readings, it was 27 minus already in November, causing these soldiers to simply freeze to death. They came to Vilnius half dead, most of them, and they actually died in big piles. I live, by the way, here in Vilnius. This podcast is made here in Vilnius, a beautiful city in Lithuania. So the troops decided, we are now around 14th of December 1812, decided to go back. They were already being pushed by Russians actually that followed them from Moscow. So they started to retreat, getting back home, and they had already robbed Moscow for valuables. They even robbed locals in Vilnius. Now they were trying to get home, but they were dead tired, they were freezing, and they were dying. So reading one historical letter, it was written that some of the high-rank officers, they were watching from a hill out over Vilnius. They could see the smoke from Vilnius, and they said it was a strange sight with the soldiers trying to carry gold and artifacts out of the city while dying, either freezing to death or being killed. So based on this, I wanted to see if I could get on the track to which place are we talking. We do know somewhat okay where these places are. Try to find some buttons, for instance, from the jackets, or some other artifacts. And of course, like anyone, I hope to find something really nice. So I spent the first part of the day going to two places, trying to check, but couldn't find any item from that. I have found other items before, buttons, when being with archaeologists. We found different things that are at museum some places, but yesterday was not the best start of the day. But that is called exploration. That is the same thing that you have to do when you trade stocks. You have to do some mistakes, learn from your mistakes, gain new knowledge. Yesterday I gained a little bit more knowledge. By the end of the evening I went back to a place which I know, and was happy having an hour and a half by the end of the evening, where I found a silver coin, and I found a nice small Christian symbol. I probably will put up a picture on the video for you who is watching the YouTube. This will be available on Spotify and also on YouTube, so I'll try to post a picture. It was a coin from 1791, silver, a griven is called, the Russian griven. Sadly, it doesn't hold any value. If you wonder, so how much is that silver coin worth? No, it doesn't hold much value. It doesn't even hold any other value. There were made quite many of these, and this was in a somewhat bad condition. Probably I could get $5-10 if I really wanted for it, but it has more value for me finding it. And I will end the podcast here with that analogy. So I told you I went back to places where I knew was a high chance of finding things. This is also a good trading strategy. Go back, do things that you knew worked before. Has a high chance to work again. Just to illustrate this, over the last few weeks I've been creating some algorithms, checking a lot of things, looking for a similar pattern, meaning that things repeat themselves. And based on this, I was able to identify a few American companies which I do an actual trade in based on their day pattern, how they behave during the day. Same analogy here is just going to things that works like this company, which I went into, had 95% of the times the same sort of patterns. Now to test this, I wanted to test this in the real, so I put real money in it. I was starting last week, I think it was Wednesday, so I have done 3 trades so far. First was successful. Thursday was a very bad day last week. 81% of all companies at Nasdaq fell on Thursday. And the company I went into didn't manage to do the normal swing during the day that it is. It missed by a cent to be exact. It was sold with a slight loss. But I regained that and much more on the Friday. So 2 out of 3. My statistics says that in 95%, 9 out of 10 times, I will be somewhat correct if I just follow this one strategy. Sounds too good to be true. Even to me, that is why I'm testing it live. But the idea goes back to places, things that you do know work. We will see. I will let you know more next week how that test is doing. Summing up, 25 minutes into the podcast, high chance that market just will continue good upwards, good support below. Remember, Friday will be consumer price index number. Thursday will also be revised GDP numbers, meaning that at the end of the week you will start to get these economic numbers that easily can push the market a little bit in some sort of direction. So I would pay attention to the end of the week. And for $1,000 challenge, the next trade I will go into is Fate Therapeutics, FATE. And if I'm lucky, I will be back next week and I will tell you it was a good choice. You would just have to like the video and return next week to see how it went. Until then, just have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.